Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to be with you today. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is +8491 432 6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Nguyen. She's a personal financial advisor. You can contact her with the email home.nguyen@vcsc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trường Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about Vietnam Strategy 2023, with the third part is Vietnam macro rising external and domestic headwinds. Vietnam's growth hit a more than 10 years high of 8% in 2022, while inflation remained under control at 3.2%. A series of global events dampened the recovery trend of the global economy in 2022, including one, the Russia-Ukraine conflict that started in February, which drove a spike in oil prices and several other commodities, and contributed largely to a surge in inflation globally. Two, China's zero-COVID measures that disrupted global supply chains, and three, aggressive Fed rate hikes and a strengthening US dollar against other currencies around the world. The slowdown of global demand started to have a visible impact on Vietnam's economy in Q4 2022 as exports fell 6.1% year-over-year. Meanwhile, aggressive Fed rate hikes required the State Bank of Vietnam to follow with a 200 basis point increase in September to October 2022, which increased the cost of funds. In addition, the arrest of key people in large real estate companies in conjunction with the insurance of Decree 65 regulating corporate bond insurance and trading has caused some concerns regarding the outlook of refinancing in the real estate sector. Despite increasing challenges both domestically and globally, Vietnam's GDP growth still increased 8% in 2022. The highest annual growth rate during 2011 and 2002. This was attributed to a strong rebound following the full reopening of the country and a low base in 2021. Meanwhile, inflation remained under control with average CPI at 3.2%, well below the government's target cap of around 4% thanks to the government's effective price management. Macro outlook, we cut our 2023 GDP growth forecast from 6.7% to 6.5% and expect GDP growth of 7% in 2024 as the global economic slowdown could continue to weigh on Vietnam's exports and production in H1 2023 before bouncing back in H2 2023 and 2024. Factors to support economic growth in 2023 including the following. 1. Higher fiscal spending to support domestic growth amidst the global slowdown. 2. China's reopening to boost demand from that country and cushion the negative impact from the weaker growth of Vietnam's exports to other economies while boosting the tourism sector. Three, a further recovery in inbound foreign tourism, enhancing economic growth in 2023. Four, continuing solid FDI flows thanks to the Vietnam's fundamental advantages in the context of multinational companies diversifying their investment and production out of China, which could in turn reinforce Vietnam's production and trade amidst the global slowdown. Downside risks to our forecast: one, slower than expected public disbursements. Two, higher refinancing pressure, especially for real estate companies, as a large amount of corporate bonds will expire in 2023 and 2024. Three, a further downturn of the global economy, which could result in a strong negative impact on Vietnam's export production and consumption. Four, global uncertainties such as Vietnam's delayed reopening, the Russia-Ukraine conflict, continuing high global inflation, and higher than expected Fed rate hikes could require the SBB to tighten monetary monetary policy to reduce the rate of inflation and currency depreciation. Upside risks to our forecast: one, faster than expected global recovery, especially in the US. Two, faster than expected reopening of China. Other key macro forecasts: we expect FDI disbursement to remain solid, growing 7% to 8% per annum to 24 billion US dollars to 26 billion US dollar in 2023 and 2024 respectively, thanks to one, improving feasibility study activities for new projects after they were disrupted by COVID-19. Two, investment diversification out of China from foreign companies amid ongoing trade tensions between the US and China. And three, Vietnam's fundamental advantages: low labor costs and a long list of free trade agreements. We cut our export and import growth forecast for 2023 from 7.5% and 8% to 6% and 6.5% respectively, equivalent to a trade surplus of 10 billion US dollar due to weaker global demand. Meanwhile, we expect a strong recovery in 2024 with respective export and import growth forecasts of 14% and 13.5%, equivalent to a trade surplus of 13 billion US dollar. We expect higher inflationary pressure in 2023 compared to 2022 due to potential price hikes of services under the government's management after being unchanged for several years. However, we expect average CPI will remain under control at 4% in both 2023 forwards and 2024 forwards as global commodity prices, particularly crude oil, are expected to decline, which will have to ease cost push inflation. We expect the US dollar and Vietnam dong exchange rate to remain stable in 2023 and 2024 as the Fed's rate hike cycle is peaking. Moreover, the US dollar could be weaker in 2023 and 2024, according to Bloomberg's consensus forecast. In addition, we expect solid foreign inflows from FDI remittances, merchandise, trade surplus and a narrowing service trade deficit thanks to the return of international tourists. To support the XBV in managing their US dollar Vietnam dong exchange rates. GDP, Vietnam's GDP growth in 2022 hit a more than 10-year high of 8.02%. According to the General Statistics Office of Vietnam's GDP growth was 8.2% in 2022, which was the highest annual growth rate during 2011 to 2022. The full reopening of all business activities as COVID-19 subsided helped Vietnam's economy to recover with 8.85% growth in 9 months 2022. However, weaker global demand started to weigh on exports and production, leading to economic growth of only 5.94% year-over-year in Q4 2022. Services sector was the main driver of economic growth, increasing 8.12% year-over-year in Q4 2022 and 10% year-over-year for full year 2022, while contributing 56.7% to overall GDP growth for the year. Within the services sector, accommodation and catering services Q4 more than 37.62% year-over-year. 2022 more than 40.6% year-over-year. Transportation and logistics Q4 more than 6.9% year-over-year. 2022 more than 11.9% year-over-year, and wholesales and retail sales Q4 more than 6.8% year-over-year. 2022 more than 10.2% year-over-year were the top gainers. However, the industry and construction sectors growth decelerated due to the impact of global economic slowdown. The industry and construction sector rose 4.2% year-over-year in Q4 2022, with the manufacturing subsection increasing only 2.98% year-over-year, which was the lowest Q4 growth since 2011. Nevertheless, the industry and construction sector increased 7.8% year-over-year in 2022, contributing 38.2% to overall GDP growth, with the manufacturing sector rising 8.1%. Meanwhile, the agriculture, forestry, and fishery sector experienced the strongest growth in 4 years. The sector increased in Q4 and rose 3.36% for 2022, the highest level over the past 4 years, contributing 5.1% to overall growth. Outlook. We cut our 2023 GDP growth forecast from 6.7% to 6.5% and expect GDP growth at 7% in 2024, as the global economic slowdown could continue to weigh on Vietnam's exports and production in H1 2023 before a recovery in H2 2023 and 2024. We expect the government will boost fiscal spending to support the economy due to the global slowdown. The country's public debt to GDP of around 44% at the end 2022 was well below the public debt cap of 70%. Meanwhile, the fiscal stimulus package of 15 billion US dollar, which was approved in early 2022 has been limitedly dispersed. In addition, China's reopening could boost demand from that country and cushion the negative impact from the weaker growth of Vietnam's exports to other companies to other economies while also boosting the tourism sector. We expect a further recovery in inbound foreign tourism to support growth in 2023. In 2022, inbound arrivals met only 20% of the pre-pandemic level, 18 million in 2019, with December's inbound arrivals meeting just 40% of the level in December 2019. We also expect FDI inflows to remain solid thanks to Vietnam's fundamental advantages in the context of mon- multinational companies diversifying their investment and production out of China, which could in turn reinforce Vietnam's production and trade amidst the global slowdown. Downside risks to our forecast. 5. Slower than expected disbursement from the government support policies and public investment. 6. Higher refinancing pressure, especially in real estate companies, as a large amount of corporate bonds will expire in 2023 and 2024. A further downturn of the global economy, which could result in a stronger negative impact on Vietnam's exports, production, and consumption. 8. Ongoing global uncertainties, such as delays in China's reopening, the Russia-Ukraine conflict, continuing high global inflation, and higher than expected Fed rate hikes, which could require the State Bank of Vietnam to tighten monetary policy further in order to reduce the risks of inflation and currency depreciation. Thus, a risk to our forecast. 3. Faster than expected global recovery, especially in the US, which could enhance demand for Vietnam's exports. 4. Faster than expected reopening of China. Industrial production recovered in 2022, but then this decelerated in Q4 2022. The overall index of international production increased only 3% year-over-year in Q4 2022, compares to 9.6% year-over-year in 9 months 2022. Lowering overall IIP growth in 2022 to 7.8% year-over-year, the highest level since the pandemic, but lower than pre-pandemic levels. The manufacturing sector was the key driver, with 2.4% growth in Q4 and 8% growth for full year 2022. In the manufacturing sector, production of beverage more than 32.3%, pharmaceuticals more than 19.2%, and machinery and equipment experienced robust growth in 2022, whereas production of metals less than 2.5%, and rubber and plastic products less than 6.6% contracted. December's manufacturing PMI hit a 15-month low, according to SMBP Global. The Vietnam Manufacturing Purchasing Manager Index fell to a 15-month low of 46.4 in December 2022. This marked the second consecutive month of decline business con conditions in the manufacturing sector, with the latest decline being the most significant since the nationwide social distancing periods in Q3 2021. The decrease was primarily driven by falling new orders, particularly export orders, which prompted firms to reduce their output and employment outlook. Business confidence remained low regarding the production outlook for 2023, but it edged up for from the 14 months low in November 2022. We expect weak exports orders due to sluggish global demand will continue to impact production and the labor market in H1 2023. Nevertheless, we expect solid FDI disbursement in recent years, as well as the trend of electronics manufacturers moving production from China to Vietnam will strengthen domestic production and reduce the impact of the global economic slowdown. And that brings me to the end of my presentation about Vietnam macro rising external and domestic headwinds. If you want to open a legal trading account, please contact us with the email and some information on the screen so that we can support you. Thank you for listening and see you next time.